My mortgage increased and I didn't know my mortgage was going to.
My mortgage went up $1,000 and I am not okay.
Guys, tell me why my mortgage went from, don't judge me here, $3,200 a month to $5,600 a month.
And I knew they was gonna get me, but I didn't know they was gonna get me this hard. It's only been 6 months in this bitch, and my mortgage is going up $700.
Hey, what's going on, guys? Sterling the Investor here, and in today's video we're going to talk about a reason why a lot of people are going to lose their homes here in the near future. Now, to be fully transparent, there's a multitude of economic reasons of why this is going to happen, but today we're going to focus on one specific reason, and that is the increase in mortgage payments and why this is happening. Let's talk about it.
My mortgage payment went from $1,600 to $3,500. This is all I have been seeing going on my timeline on TikTok right now, on how everybody's mortgage rates are increasing.
So to actually correct her right there, the mortgage rate itself isn't actually increasing, assuming that they have a fixed rate mortgage. Now, most of the mortgages over the last few years have actually been fixed rate mortgages, so the rate is most likely not increasing. It's something else, and we'll talk about that a little bit later. Now, if they have an adjustable rate mortgage, that's something completely different.
Honestly, I can tell you what, when I first bought my house and I had a realtor, my realtor did not tell me anything. I bought the house, I didn't know what I was doing, I was not a realtor then, of course. And I did not learn about my payment until the closing day. I did not know how much my mortgage payment was going to be until the closing day.
Now that's very, very unfortunate. Under no circumstances should a borrower and a buyer be uninformed about their mortgage payment until the closing date. Now, I find that a little hard to believe because I've been a lender for nearly 10 years, and you receive multiple disclosures that show the monthly payment, including the taxes and insurance, assuming that they have the escrow included in their mortgage payment. So she may not have been paying attention to the disclosures that went out, and she may have just been signing them. And in fairness, the lender could have just told her, hey, yeah, they're just disclosures, go ahead and sign them. But specifically, the closer you get to the closing date, you want to make sure you read over those disclosures, because those numbers are getting closer and closer to what the actual final numbers are going to be versus the disclosures in the beginning that are just preliminary. But yeah, under no circumstances should someone not know their monthly mortgage payment when they get to the signing table.
I signed on a dotted line. At that point, for me, I was ready to buy a house, so I just felt like it was what it was.
I've seen those videos when people come on here and talk about how they purchased a home one year and then the following year their payments almost doubled and they regret purchasing a home they should have continued renting. I'm going to prevent you from feeling like that when you purchase your home. So here's what happens, right? When you purchase your home, ideally you'll get an escrow account. In the escrow account, the lender is collecting money so that when it's time of the year for you to renew your insurance or to pay your taxes, they can withdraw that money from the escrow account and make that payment on your behalf, correct? So what happens is the people who usually make those complaints, what happens is their taxes go up the following year, which is realistic because Uncle Sam's main goal is to F us in the rear, obviously. So your taxes are going to go up, and if there's not enough money in your escrow account, your mortgage payments are going to go up because they have to now account for the increase in your taxes.
Right, so what she's referring to here is a mortgage escrow shortage. So basically, when they set up your initial escrow, they put a certain amount of money in it. But when the taxes and insurance go up, there's no longer enough money to cover the increase there. So then on your next mortgage payment, after they reassess it for the next year, they're going to include that amount to catch that escrow up, and that's why your monthly payment goes up, opposed to just paying it all off at one lump sum, them sending you a big bill. They'll stretch it out over the 12 months, which for most people is, more reasonable, more comfortable for them. But you do have the option if you want to just pay the escrow off at one time and catch it up, and then that way your monthly payment won't go up. I recently just did that for my mother. She lives in Florida, so with the hurricanes and everything, the insurance went way up, so it caused a big escrow shortage. And opposed to having her have a higher monthly payment, we just went ahead and just paid that off for her so that her monthly payment actually stayed the same.
To prevent this from happening or to prevent you from going up too much, The first year after you purchase your home, you have to make sure that you file for homestead exemption, especially if you're up in age, in your 60s, or if one of the people on your loan is in their 60s, you can actually get another discount on your taxes if you are an older person.
Yeah, so this is a great point she brings up. So everyone should file for homestead exemption. That's something that everyone qualifies for, assuming that it's your primary residence and you live there. Now, the second exemption she's talking about is a senior exemption, and this is a very, very significant exemption in most states. So if you have someone, I think most places either 62 or 65. If you have someone that is occupying that home with you that is 62 or 65 or whatever the age number is in that state, you can qualify for a senior exemption, and this brings the tax bill way, way down. So that is a great point she made, and something that if you can take advantage of, you 100% should.
File homestead exemption, which means that this is your primary resident, you get a discount on your taxes. If you're older than 60 or in your 60s, you also get another discount.
So let's actually talk about this. So the actual mortgage, the principal and interest isn't what's actually going up. The thing that's actually going up is the taxes and insurance, the escrow. Assuming that you have a fixed rate mortgage, which most of the mortgages over the last few years, I'll say at least 5-7 years, have been fixed rate mortgages. They haven't been adjustable rate mortgages, aka an ARM, and that's a completely different discussion for a different time. But assuming that the mortgage is a 30-year or 15-year or whatever the term is, fixed mortgage, the mortgage payment itself isn't adjusting, it's the escrow. So what happens when you purchase a home, let's say you purchase a home that was last sold 5 years ago. The current property taxes are based on the value of that home 5 years ago, assuming it hasn't been reassessed. And a lot of times our homes aren't reassessed every year. So then when you purchase the home, the property will be based on the owner of record for that year. So the property tax are going to be lower. But then once you take ownership of the home and the county is made aware that there's a new owner of record, they're going to go out and reassess the property, and they're going to base the taxes off of the current value of the property, or what they deem as the current value of the property. And that's why you'll see the property taxes go up, because you bought it based on an assessed value of maybe 3, 4, 5, 7 years ago, and now when they reassessed it, it's based off that current value. So that's why you see that big spike in property taxes. And then with insurance, you should always expect a normal increase just because of inflation. Everything is going to go up a little bit over time, so you should expect and prepare for that normal increase. But let's say you live in Florida and there's something like a hurricane that comes around, or in Oklahoma, a tornado, or in California, an earthquake. These type of events can cause your insurance to skyrocket, and that's when you'll see those big increases in homeowners insurance. And the worst scenario that I'm seeing actually applies to new construction homes. And a lot of the times the lender and the closing attorney or title company will set up your escrow based on the value of the land versus an estimated value of what that property is going to be worth. And unfortunately, a lot of these lenders and mortgage professionals, real estate professionals, they just want to make a commission check, and they know this, but they don't say anything because they want to get the buyer to the closing table to get that commission check. But I've been a licensed lender for nearly 10 years, and how we go about business is we'll always make an estimate based off of comparable homes in the area. So we'll typically here in Georgia, we'll do somewhere between 1 and 1.25%, because that's where most homes fall, and that will prepare the buyer for what's coming in the future. The worst case scenario is you overfund the escrow, so now you have a little bit more cushion. So when those taxes and insurance do increase, you're not caught off guard. Your escrow is properly funded, maybe even overfunded, and if it does go up a lot, you may not have to add money at all, or you may just have to add a little bit of money to catch up your escrow. So unfortunately, there are some bad apples that won't set people up for success. And it looks good when you first get the mortgage payment and your property taxes are extremely low because it's based off of land, which makes the overall monthly payment extremely low. But no one has explained to them that it's based off of the land and not the estimated property taxes in the future. All right, so enough about the problem. Let's talk about some solutions, and here's some things that you can do if you're in this situation. So the first thing you can do is you can challenge and appeal the county to lower your property taxes. If you can make a strong case that they are overvaluing your property, and can present comparable properties in your neighborhood or zip code, there's a chance that you can get the property taxes lowered some. Now, it doesn't always work, but it's certainly worth a shot. The next thing you can do is shop your homeowner's insurance, so you can shop around and see if there's a different carrier that can provide you a better rate, and that can help lower your monthly payment, lower the escrow down some. Another thing you can do is if you have enough equity and you want to get from under the mortgage, you can sell the property, and in that way you don't have this problem to deal with at all. So that's an option that you can take as well. And I hope you guys found this video helpful and informative. It would mean the world to me if you guys could leave a like on the video and consider subscribing. If you do have any questions about mortgages or real estate, I've been in the business between being a realtor and or a lender for over 10 years now. So just feel free to let me know if you guys have any questions. Leave them in the comments below. I hope you guys have a wonderful day. Peace.